morning, everybody. Be a reader of your mind and writer of your life. Once you know yourself better, you need less approval of others. With these words, I, Dr. Amit Kansal from Teerthanker Mahaveer Institute of Management Technology, is here to solve your problem related with accounting. So many of you are scared with the word accounting. As the word accounting comes, you start sweating. Isn't it? Today, the question is why do we follow accounting? But before that, it is very much essential for what we do accounting. So we basically do accounting for business. Business is an activity carried out with an intention of earning profit. There are three types of businesses. One is sole proprietorship, other one is partnership, and the third one is joint stock company. If we talk about sole proprietorship, so this is a business which is being carried out by a single person. He is responsible for all the activities required for running the business. Whereas in case of partnership, two or more people are required. Two or more people come together and start their business. Whereas in case of joint stock company, so many people come in that particular business and they run it collectively with the help of the appointed directors and earn profit and distribute it like other businesses. Whatever may be the form of business, but ultimately the accounting procedure would be same for all the businesses. What a person want to know about a business? What a person want to know about the business? A person who devote his whole time, whole efforts, he at the end of the year wish to know about the two facts about the business. One is what is the result of the operation of the business which he or she has been carried out throughout the year. Second one is where the business stands in the financial term, like the what is the position. So here the process of accounting come into picture. So these are the two questions which a person wish to know about the business. What are the silent features of business? Now that is the more important thing, because if you are not aware about the silent feature of accounting, you will not be able to understand it. As I initially mentioned, just to go through a particular thing, you need to know about it at all. The first thing which I would like to mention is it is man-made. Accounting is man-made. We have prepared accounting for helping ourselves. Second thing is it has evolved over a period of time. It was not built in a day. It evolved over a period of time. It is practiced in social system. The third important feature of accounting is it is practiced in social system. It is practiced in social system. But sometimes it is judgmental. Judgmental in that sense that its rules and regulations are not that much rigid. You can, make judgmental type of decisions somehow. The fifth one is it is flexible. It is not rigid approach. And most important feature of accounting is that it is a language. It is a language of business. The ultimate objective of this financial accounting is to communicate the financial result to the ultimate user of accounting. A large number of accounting users are there. What is a language of business now? I would like to ask this question to you. Accounting. Accounting is a language of business. The word accounting can further be classified into three categories. First one is financial accounting. Second one is cost accounting. And third one is management accounting. These three branches of accounting have their specific benefits. Like financial accounting, if we talk about, financial accounting is concerned with collecting, identifying, recording and summarizing the accounting transaction. Point to be noted, accounting transaction which are economic in nature. It means if any transaction is not economic in nature, we will not record it in financial accounting. Whereas cost accounting is concerned with determination of cost. It is not merely concerned with determination of cost, even it is related with control of cost and as well as reduction of cost. The ultimate objective is reducing the cost without compromising the quality, and that is possible with the help of cost accounting only. And the last one is management accounting. Management accounting is not a new branch of accounting. Basically, it is collectively a collection of all the information from the various departments and providing information to the manager for taking managerial decision. Let us suppose if a person come to me and asks for credit, like he just come, he said, I just want credit मुझे उधार चाहिए. तो in that particular sense, now you have to make decision कि whether you should give credit to him or not. So for that you need certain informations. For those information you will definitely ask for management accounting. So management accounting is concerned with collecting information from various departments and taking decision based on that. Now what are the principal statement of accounting which we are talking today? So there are two basic principal statement of accounting. First one is the income and expenditure statement, which we usually call trading and profit and loss account, and the other one is the position statement, which is called the balance sheet. Am I clear? Who are the users of financial accounting? Now a burning question is that we are talking about accounting from the beginning, but who are the basic user of accounting? The first and foremost important user of accounting is the owner himself. Owner, yani ki shareholders. Owner wish to know what efforts they have made, what are the result of that, whether it is profit or loss. They just want to know about the result of that particular efforts. Second one is the management. Management is not necessarily be the owner, because management team can be different from the owner. So they just want to know whether they are at the right track or they need some improvement in them. So that's why management is also very much keen to know about the accounting informations. The third one is the creditor. Creditor are those who basically give you credit. जो लोग आपको उधार देते हैं, they are basically the creditor, and they also wish whether credit can be given to you or not. As I initially that someone comes to you and asks you for credit, so you simply provide certain information, so that information will be provided by your own statements. And the fourth one is the customer. Now you will say, sir, why customer? Why customer are interested in knowing about the information? It is very much simple. If there is a company which is a growing company, so definitely you will go with that particular company. If you know about a company which is going to be shut down within near future, so you are not going to buy the product of that particular. You can take an example of Videocon. As we know that Videocon company is going to just close within few years, months, or whatever. So people stop purchasing the goods for Videocon, because you know accounting information basically provide the base for them to take decision. Now bank and financial institution, sometime you need money. For getting that money, you just ask the bank, and bank will definitely ask you for providing certain information like your balance sheet, your few past year balance sheet. So that balance sheet will be provided if you are maintaining good accounting records. The sixth one is the employee. Why employee need information, accounting information? Basically it is very much simple. Employee basically seek their future within the organization. If the organization is going to get sunk with a near future, so why he will stay with the organization? He will also look for the other organization. Moreover, if an employee is seeking for increments and all, so it will be based on the profit. If he asks for the bonus, so he will ask that particular bonus on the basis of the profit earned by the company. If company or organization or the organization structure is not earning profit, so he or she will not ask for the increment as well. Next one is the investor. Investors are keen to know about the accounting information for the investment point of view. Researcher, this is very much important person to know about the accounting information of business. Now you will say, why a researcher need accounting information? Because he is no more concerned with the benefits, profits or losses of an organization. So why he or she is interested in accounting information? The answer is very much simple. Let us suppose a researcher doing a research, just the topic is financial performance of public sector and private sector banks. There is a research. He just want to know which particular bank is performing well. Like if we talk about public sector bank only, so we can compare the accounting information of PNB and State Bank of India. Ab State Bank of India and PNB, if you wish to know about their comparative study, so you will have to ask for their financial statement, like 5-year, 10-year, whatever study period you have opted for, you need that particular statement for that period. Other one is the tax authority. Tax authority, it is very much clear to all, because tax authority is concerned with collecting tax from you, and that tax can be collected based on the profit earned by the organization. And what is the determinant of the profit, the determinant of profit is the financial statement of that particular company. Last but not the least is the general public. General public make perception about a company. They advise, free advice or whatever to their known based on the information provided by the company. If there are good feedback of that particular company, so they give good feedback, otherwise they will not give that good feedback. This is all about the accounting. Why do we need accounting? Who are the users of accounting and all. Now let's come to know that particular fact that this accounting is a language. To be a language, there must be certain rules. There must be certain regulations. On the basis of that particular accounting can be done. Let us suppose we are good at English. हम लोग English में बहुत अच्छे हैं. तो there is a word वह जाता है. He is going. What? He is going. Yes. Is it a correct sentence? वह जाता है, he is going? Absolutely not. वह जाता है, he goes. He is going means वह जा रहा है. तो similarly, once you know about the rules of English, you simply, stop me, sir, what are you saying? वह जाता है, he goes. Why you are saying he is going? Because you are known to the rules of English. You know about the tenses, that you are not using a proper tense when you are translating that particular word in English, that particular sentence in English. So in that sense, accounting also follows certain principles, but these principles are further divided into two parts. One is the concept, जिन्हें हम लोग accounting concept बोलते हैं, and the other one is accounting conventions. Let us start with the concept itself. These are the basic pillars of accounting. Without that, accounting is not possible. The first and foremost important concept of accounting is business entity concept. What it states. Now you will get surprised कि sir ये तो concept बहुत सारे याद करने में it will take time. You need to know about the crux. What is the crux? You know that, you just keep it in your pocket and enjoy yourself. There is no need to जिसे बोलते हैं पूरा रट्टा मारने की कोई जरूरत नहीं है आप लोगों को. You need to know about the crux of that particular concept. The business entity concept state that from the very first day, business and businessman both are separate. What is the gist of that particular concept? Whatever business withdraw from the business, that must be recorded. Whatever he or she bring in business, that must also be recorded. And this concept is over. So you need not to keep it in your pocket all the time when you are recording accounting transactions. You just know the crux. If you are withdrawing something from the business, that must be recorded. If you are bringing something in the business, that must be recorded. Only that is the way that you will become to know about the future profit of that particular organization. Other concept is going concern concept. First concept is clear to all of you, I think. Business entity concept state that business and business both are separate. Second concept is going concern concept. Now going concern concept is what? Going concern concept state that business is a never ending process. Now what does it mean? It means that if you are preparing your account on 31st of March, so it does not mean that you will stop your business or you will simply say, I'm just preparing my books of account, so you just go, you just come tomorrow. It does not mean that. If somebody is coming to you, sir, I need goods, so you will simply say, no, we are just closing our books of account, you just come to the next year. So it means we basically keep all the transaction continue and we give advance for the goods, we receive advance for the goods, we give advance salary to the people because it is a continuous process, and moreover it is entirely different from the entity of business. If anything wrong happened to the businessman, wrong means that wrong, so business will not stop. If any mishappening happened with the owner, suppose he passed away, so in that case his son, his daughter, his brother, whosoever will be available there, he will continue the business as it is because business is a never ending process. Third concept. This concept is clear to all of you? Third concept is the cost concept. Cost concept state that things must be recorded at their cost, not at their market price. Let us suppose that at the end of the year, there is a stock left in your warehouse, so that must be recorded at cost, not at the market price. And if the market price is less than the cost, then it should be recorded at market price. This is the cost concept all about. Dual aspect concept. Dual aspect concept state that each and every transaction have two aspects, because without aspect we cannot record any transaction. Nothing can come in business without paying something. Whether we'll pay it today or we'll pay it tomorrow, it hardly matters, but ultimately nothing can come in business without paying something, and nothing can go out the business without receiving anything, whether you will receive it today or tomorrow. If someone comes to you, sir, I need that particular goods, and that particular good worth 10,000 rupees, so whether he'll give it today or he'll give it tomorrow, it hardly matters, but ultimately there are two aspects. The person is taking that particular good from you and you are giving it to him. These are the four concepts. Next concept is money measurement concept, very much important concept. What it state? I am just giving you the crux. I also request all of you to keep the crux only with you. Do not get into that particular concept up to the depth, because it is not required when you are just recording the books of account. Money measurement concept. So money measurement, as the name suggests, money measurement concept. So money measurement concept state that only those transactions will be recorded in the books of account which can be measured in terms of money. It means we do not record quantitative, we record qualitative term. We cannot record 2 chairs, 4 tables, 5 stools. We will record these things in monetary term, if it is possible. If it is not possible, we will not record it. Very simple. But money measurement of everything is possible, whether it is scrap ही क्यों ना हो, you can record the money term, you can measure it in money term. Next one is the accounting period concept. So we basically confined to an accounting period of 365 days. So generally we make accounts for 365 days. So accounting period concept said that you are making books of account for a particular period of time that may start from 1st April to 31st March or 1st January to 31st December. 1st January to 31st December is called calendar year, whereas 1st April to 31st March is called the financial year. Next thing is, next concept is realization concept. Realization concept state that things must be recorded in the books of account when they get realized. If anything is not realized, it must not be recorded in the books of account. Next concept is matching of cost and revenue concept. Matching of cost and revenue concept state that the revenue of a particular year must match with the income of that particular year. Let us suppose I have spent something in the year 2019 and I'm making payment for that in the year 2020. It does not mean that it will become the expenditure of 2020. It will be termed as the expenditure of 2019 itself. Am I clear? It is because if you mismatch or you juggle those expenditure to each other, so you will not be able to know about the correct and true profit of that particular year, which is very much required because you are basically preparing books of account on the basis of accounting period concept. Now let us start with the convention. So accounting concepts are almost over. What we were needed, we have done that. Accounting conventions. As far as accounting conventions are concerned, so they are basically the traditions. You know traditions? Usage and the customs, which we have followed in that determined way that they have become rules. Actually, they are not rules. They become the rules because we have followed them too rigorously. So first one is the convention of disclosure. Convention of disclosure itself states that nothing should be hidden in business. What is this? It means if anything happen at a particular point of time and that can be recorded, so it must be recorded. So nothing should be hidden. If you are doing we'll discuss about it further, like there is a secret reserve and all. This is basically unethical with the viewpoint of this convention of disclosure. The other convention is convention of consistency. Consistency state that once you have followed one rule, so you should stick with that particular, don't try to change it. But it does not mean that you cannot change it. If it is very much required and prescribed that it must be changed, so you can change that. Let us suppose, actually we will talk it in detail further, but there is a term depreciation. Depreciation means what? The gradual reduction in the value of an assets. Whatever we bring in, like there are certain fixed assets. If we brought those fixed assets, so they get depreciated with the passage of time, with the usage of that particular assets. So there are two ways of charging depreciation. One is straight line method of charging depreciation. Other one is diminishing balance method. We are not discussing it at all. Basically, I'm just quoting this particular depreciation just to make you understand what basically the consistency concept state. So we can follow either of the one way of charging depreciation. So what we have decided, we are charging fixed, straight line method in the year 2000, and in 2001 we are suddenly decided that we will charge diminishing balance method of charging depreciation, or written down value method of charging depreciation. It is possible, but it does not mean that in the year 2021 you again say that I will charge fixed, straight line method of charging depreciation. This is not possible. Matlab, this should not be done. It is a kind of custom ki we should not change it. Recurring base per we will not change it, but if it is required and if it is suggested and if it is good for the business, we can change it. This is the consistency. Convention of conservatism, very much important conventions with the viewpoint of Dr. Amit Kansal itself. Reason why? Because this is the base of accounting. Convention of conservatism. Conservatism conventions state that make provision for all the losses. Point to be noted, make provision for all the losses. It means if you are expecting any kind of loss which may occur in future, you should make provision for that. But if you are expecting any kind of profit in near future, don't consider that profit as profit. Now understand it in detail. If you have make provision for that particular loss which may occur in future, and if that loss occurs actually, there is no harm to the business, you are safe because you have make provision for that. Like हम लोग भी तो अपनी लाइफ के लिए लाइफ इंश्योरेंस लेते हैं. We take life insurance because we know that tomorrow we may die just because of any reason or natural death, we can have that. So we particular have life insurance, but so many people, you have heard there is no need for life insurance. Whatever. Let us suppose that tomorrow any mishappening happens to them. So what will be there with the family? Family will be on the crossing. चौराहे पे खड़ी हो जाएगी family. So you need to have that life insurance premium just to give a kind of safety to your family. Similarly, if we make provision for the losses, we are at a good position, and let us suppose that particular loss doesn't happen. You have not encountered with the loss, then what is the harm? You are enjoying your money today. You have made provisions yesterday, but today you can enjoy that money. What is the problem? तो आप आज उसे enjoy कर सकते हैं. If we have make provision for the profit that may occur tomorrow, ठीक, and that profit, if that particular profit doesn't happen to you, then what will be there? You will suffer a loss. So that is the reason we make provision for the losses, but we do not consider any near future profit into books of account, because moreover it also give a support to the realization concept as well. जो हम लोग realization पढ़ा था, realization concept state that only things must be recorded in the books of account when they get realized. If they are not realized, they must not be considered. So conservative concept also state that if any loss is expected in future, so that must be recorded, but if any profit is expected in future, that must not be recorded. And the last one is convention of materiality. Very much important. Materiality concept state that only materialistic fact must be recorded in the books of accounting. Though it is a contradiction to the full disclosure convention, your concept, but we do follow it. Convention of materiality basically state that we should not give importance to the tiny things. Tiny things bole to, like if we purchase a matchbox costs only 1 rupees. So we are not going to record it as it is, like if we have purchased one matchbox. We are purchasing nail of 5 rupees. So we are not going to record it as it is. Though we will record them collectively, like miscellaneous expenditure, petty expenditure. So we must record those things in that particular sense, that they should not, remove the beauty of books of account, because it is very much analytical in nature. So if the presentation will be worse, so nobody will be interested in that. So for getting the good presentation, you need to keep that particular convention in your mind, that only materialistic fact should be there in your books of account. Now it should be noted that accounting is man-made, as I have earlier said. Art designed to help man in achieving certain objective. So accounting is basically man-made. The ultimate objective of accounting is to know about the profitability of that particular business or position of that business. So keep in that mind, and accounting gets and at that particular time. Sometimes we also know that the bookkeeping, what is bookkeeping? So bookkeeping and accounting both are basically complementary to each other. Books of accounting ends with the preparation of books of account. There are two books of account. One is usually we have heard. One is called the journal and other one is called the ledger. Once you prepare journal and ledger, books of accounting gets end, and then accounting start. And the objective of accounting is to prepare two principal statement, that is the trading and profit and loss account, and other one is the balance sheet, which is called the position statement. I think now it is clear to all of you that what is accounting, what are the rules, who are the users of accounting, and if you are very much clear about those facts, so things become easy for you. Thank you. Have a good day.
Teerthanker Mahaveer Institute of Management and Technology. This institute has laid emphasis on industry interface and hands-on training to prepare students for their professional life. We take a case study based approach to teaching. We encourage them to debate, discuss and make presentations in smart classrooms.
In teaching, we basically focused on the case studies, and the case studies are from the Indian background. Most of the B schools are teaching case studies from the international level.